Here's a quick market report for November where we saw prices flat for the month. And later in the video, I have encouraging news for both buyers and sellers. Homes for sale are up year over year, but it looks like we're starting to see early signs of the holiday slowdown month over month. This is also evident in the drop in new listings month over month. Closed sales are flat year over year and with a slight uptick month over month, but this is mostly due to coming out of the summer slowdown. The median sale price was slightly down year over year, but this was caused mainly by a slower condo market, with house prices holding steady. For most of this year, a disconnect has existed between buyers and sellers, where sellers would think their home is worth more than it is, and either not accept a buyer's offer or accept their offer, but provide very little to no concessions during escrow if the buyer uncovers issues. Thankfully, this is changing. Sellers have recognized the market we're in and are making buyers feel more comfortable about moving forward with a purchase. This was recently true for my buyers, with whom I was able to negotiate a $60,000 credit. And this is also evident in the numbers. Of the closed sales I see, almost all of them are selling below the asking price. And that's not to say that all these homes are being sold below market value. It just means that sellers are finally ready to meet buyers at the negotiating table and play fair. Sellers and also homeowners who've been waiting to sell, this is good news for you. This will encourage buyers to get off the sidelines and enter a market that is fairer rather than one dominated by stubborn sellers. Another reason why buyers have been coming off the sidelines is that mortgage rates have gradually declined to their lowest level in 12 months. This is despite mortgage rates increasing after the Fed cut rates. And this could have been confusing to some, but for those who have been following me, you're aware that the Fed doesn't directly set mortgage rates. Instead, investors in the bond market do. So even though the Fed cut the Fed funds rate by 0.25%, this was already baked into mortgage rates. However, what caught investors by surprise is Powell not committing to another rate cut this year. In previous meetings, the Fed had hinted at a cut in December, but they've reassessed that opinion, and that negative sentiment caused investors to sell bonds, which drives the price down and the yield or the rate up, and in turn, mortgage rates went up too. There's another reason why mortgage rates have been declining, and this is a silent contributor that often goes unnoticed, and that is the spread between a 10-year bond and mortgage rates. Banks have been reducing mortgage rates at a higher pace than the 10-year rate has been decreasing, contributing to mortgage rates being at their lowest levels. And this is happening because financial markets are feeling a lot more optimistic, so lenders are taking a smaller markup.